Hi there traders, this is Matt Krupski here with Chartered Financial Services with your weekly options beat here on Tuesday, May the 2nd. This week we're looking at a couple different things. First, we're going to talk about live cattle options. May live cattle options come off on Friday. Usually here on the weekly options beat we do a open interest profile, but today we're not going to look at a live cattle option open interest. There's just not enough open interest there to drive the futures market, but I did want to mention it because of the current situation where we have the huge discount in June futures to where the cash is trading. With those options that come off Friday, for traders looking for kind of a short-term way to play the market, with very few days remaining on the options, that makes those options relatively inexpensive because you only have about 3.5 days now to be right. But you still get the benefits of being long options, which are a defined risk. So if you're looking to speculate on live cattle over this week, maybe look at doing it in the May live cattle options because, again, they expire on Friday, so they're relatively inexpensive. Also, this week we have US FOMC meeting, Fed Open Market Committee meeting today and tomorrow to decide on interest rates. No real changes expected. However, what many of you may not be aware of is that the CME now lists weekly options on the S&P index that expire on Wednesday. So again, another great way to play that meeting. Defined risk. They come off Wednesday at the close, so you will get meeting decision that comes out tomorrow afternoon. You will cover that with those weekly Wednesday options. So another thing to look at for those speculators concerned about the FOMC meeting. Finally, this week, we've got FX options coming off. I did look at an open interest profile in the pound, British pound versus the dollar, simply because we've had such a big move in the pound. It's been such a volatile currency recently, given Brexit and all that's gone on there. And if we look at it here on the graph, we can see puts are basically out of play. With us trading right above 129 right now, basically 0% of the puts are in the money, but 82% of the calls are in the money. And as a refresher, generally, as we approach expiration in options, the in-the-money options can drive the market due to the hedging activity of the market makers hedging their positions. So with such a large percentage of calls in the money, it wouldn't actually surprise me to see that us push higher in the pound over this week and continue to push more calls in the money. We get above 129.5 there. That puts about 85% of the calls in the money. If we get above 130 there, you can see there's a decent amount, almost 1,000 open interest in 130 calls there. That would add another 5% to the in-the-money options. Again, I would maybe consider looking for a move higher into the end of the week in the pound and then maybe settle back down early next week. So if you have any questions about the mechanics of these hedging trades and why the expiring options can move the markets, I'd be happy to talk to you. Shoot me an email, hit me up on Twitter, give me a phone call. I'd love to hear from you. And as a reminder that these are my thoughts, not those of ADM Investor Services or Chartered Financial Services. Thanks and have a great day.